Hey everyone, it is Jay Cottrell here with eXp Realty, and as always, I'm here with Josh Pruitt with Sierra Pacific Mortgage. And sorry we haven't done these in a few months, but it has been a bit of a hectic summer, actually for both of us with our careers in real estate. And but we did think it was important to go ahead and get a video out for a mid-year update. So since we have data through the end of June now, we can kind of give you the first quarter and second quarter, what that looked like this year, which is pretty much different than every expert thought, and then kind of give you an idea of what the experts think the rest of the year is going to look like. Um, so, Josh, I will let you go ahead and start us off and talk to us about the mortgage market.
Awesome. Thank you. Hey guys, hope you're doing good today. I'm happy to share just a little bit of info with just kind of where the market has been, kind of where we hope that it's going to, some good changes and stuff there. So let's see here. Where's our first slide there? All right, so mortgage rates as of today. So as you can see, we've got a little bit of a drop in the rate. Rates have been fluctuating for the past month or two. They would be at a 6.8, jump up to 7, jump up to 7.15, 7.25. And that's what's been happening here the past couple of months, kind of been fluctuating between the two of those, and kind of just hanging out in the sevens there. I've even seen on my end, rates have jumped up to, now where our ceiling has jumped up to an 8. But that has now begun to drop back down into the lower, looking in the, like I said, national rates 6.87 for 30-year fix, 15-year fix is 6.28, 30-year FHAs at a 6.5, 30-year jumbos at a 6.88, 30-year VA at a 6.49. Now, obviously, these are national rates. So just because it's a national rate does not mean that it's available to you, right? There's a lot of factors that go into what rates you qualify for, whether you're looking at the property, your credit score, how much money you're putting down, the loan to value. There's discounts that apply to all that. So,
So let me interrupt you for a second.
Yeah.
So when you said your ceiling was currently 8%, explain what that ceiling is.
Yeah, so ceiling meaning that we won't go anything above 8%. And, when we're looking at an 8%, 7.5%, 7, 6.875, 6.5, what happens is, we're talking about discount points, right? We're talking about what, there's a fluctuation between where the rates are at and what price you will pay, in the rate, right? So we say the national rate is at this, but a discount point 1% is probably right around a 7, right, or 7.125, right? So that's when we say our ceiling is we won't go above 8, but there's a fluctuation to where you can go with an 8% if you want. It's lower cost, for you up at that range. Now that's looking at like a conventional, right? So obviously the government loans are lower than that, but we've seen 8 just recently with the increase. So the new normal mortgage rates in 6 to 7% range, guys. This is what we're going to see from here on out through probably 2024. So maybe not 6.875, but you may be looking at low 6s in 2024, maybe even high 5s. There's a chance that we may hit that. But the good news is even though it's the new normal, we are seeing stability in the CPI. We're seeing stability in inflation, where things are starting to look a little better, and the feds are not balking at that and wanting to just jump it up another 400%, which is what it seems like. But we're seeing a little bit of normality there, so things are starting to look a little better. So you see there 6.71. So I think we'll start to see the rates come down just a little bit coming into the fall, kind of hanging out there, and maybe 2024 coming down just even better there in the 6s and maybe even the 5s. We'll see. So
okay.
And then, of course, this is a projections. This is back in 2020 or January of 2023. We thought that, hey, we might be looking at a 6.35, 6.05, 5.9, 5.73, and that didn't happen at all. And the reason being is because we were right in the middle of where we've hit our 1 year mark from July of last year when the rates really shot up. And there was a lot of instability, and not really anybody could really project what was going to happen, right? So inflation was still really bad. The CPI, the index was still up as well too. So there was a lot of factors that we just really didn't know. So this was hopeful thinking. But with that, July of 2023, we're looking at what does that average mortgage rate projection look like? So quarter one, we were not at 5.77, right? Oh, that's 2024. Sorry.
Let me go back. Let me go back.
Yeah, I was at that previous slide, but you're good. We were looking at quarter one, 6.35, and then going down. But go ahead and go to that July projection chart. So now quarter three, we're looking at about 6.3% average. Fannie Mae saying about 6.6, which I think is good. Quarter four, 6.3, average 5.97. I'm thinking 6.3 looks really good. And then quarter one and quarter two of 2024, we could very well be in that kind of range. But I would say 6.6 to 6.3, maybe even 6.1 is really, really kind of think where we're going to be hanging out for a little while. We'd be lucky if we're in the fives in 2024.
Right.
So.
What I find interesting about the expert projections is January and July look exactly the same. They just moved the quarter. They just changed the quarter numbers.
Right. Right.
So, yeah, I mean, take it with a grain of salt, I think.
Yeah, and here's the thing to think about is, if anything, the positivity is at least the needle's moving in the direction we hope to see it moving finally.
Absolutely.
Right. So it's not a matter of, hey, we're going to be in fives in 2024. It's like, you know what? It doesn't really matter. What matters is are we moving that direction? Right. Let's quit trying to project where we're going to be at with the rates, and let's just be thankful and looking at, hey, are we moving that direction? That's what matters the most. Right. As opposed to we were hopeful that we were moving that direction, but then we were going the opposite direction. We were going up, right, versus down.
Right.
And we didn't know what to think or what to really speak on. So,
and the speed of that movement is what nobody can predict. That we've noticed that over the last 2 to 3 years, because, we saw last year they started out saying, hey, we would be, rates might go up a little bit, but then they're going to come back down, and we saw rates drop.
Right.
Faster than anybody expected. So,
right.
I like what you're saying, that we're moving in the right direction. We just don't know. Nobody knows where that's going to end up, but it's moving in the right direction.
We need to keep, everything is kind of a swinging balance, right? So the 2 years that we had of good rates is going to take 2 years for it to balance out, right?
Yep.
So, and what I mean by that is, starting June, July of last year is when rates really shot up and really impacted. Well, we just hit the 1 year mark since that even took place. So give it another year. I would say to be very hopeful that after July of 2024, we may be looking at more normality than anything, that'd be our 2 year mark, now I'm not an expert, but I have reason to believe that, I feel like that's a good solid area. Now, granted, we're also going into elections
right
at the same time. So, November 2024, is it 2025? So that's another factor that's going to, play into everything. So,
yeah. Well, and the interesting part of it is it's like the housing market. We had basically a decade's worth of home price appreciation in about 2 to 3 years.
Right.
So it's going to take a little bit. It's going to take a while for that to settle back.
Right.
To settle back down.
So on this slide here, just briefly, what I wanted to share was, the confidence in the housing market. If you see that green line, it's the average is about 51%. And you can see Q2 of 2021 all the way to Q2 of 2023. Average is green, confidence is in blue, right? So obviously in 2021, quarter two is when things started going downhill as far as the confidence in the housing market there. Well, what I wanted to share was if you look at quarter four of 2022, obviously the confidence in the housing market was way down, right? And in fact, we saw sales decline in quarter four, which it's a normal slow period, right? October, November, December. October usually pretty good. November, you're kind of balancing out. December, it's holiday season. Nobody's really purchasing. You got your ones that have been in the process that are just kind of, finalizing on what they were purchasing or going to purchase, or, they found something finally they liked, let's buy it, even though it is Christmas time. And then into quarter one, it was still down January, February. But if you noticed, it jumped back up as far as the confidence in the housing market in quarter one and quarter two. It's kind of flatlined, right? Well, what I anticipate seeing is that actually going back up to averaging out in quarter three, quarter four of 2023 because of the rates updating and changing and coming down just a little bit. But if you notice, we're only, what is the percentage? I think it was like 40, it's like at 48%, I think, or 47%, something like that. We're not that far off from being at the average, right? So, and I think we'll see that catch up to the green between quarter three, quarter four, quarter one of 2024, maybe in quarter two, but we'll average that back out and be back in a normal market.
Yeah, and I think there's two aspects to that housing confidence. One, it's pricing, so it's what are homes priced at, and then what are the mortgage rates? How the affordability side. But then it's also availability. I mean, if you're out looking for homes and you don't see any, then you're not very confident that you're going to be able to find what you want.
Well, and I know you're going to talk about this a little later, but one of the things that's playing a factor in that is I think the rates coming down a little bit is going to provide ample opportunity for those that have been waiting to list their house.
Yes.
The confidence in knowing that the rates are coming down so that they can list their home and know that they're not buying in a rate increase market, maybe a rate decrease market, right? So I think that'll play a factor in that as well too.
Got it.
Good segue into you hitting the real estate market update.
Absolutely. And also feel free to chime in anytime.
Absolutely.
So this was kind of some bullet points I borrowed from one of the things I use to keep up with the housing market. And it was they're kind of housing at mid-year, and there's good news. Housing is normalizing after two unprecedented unicorn years, which would be 2020 and 2021, and actually kind of 2022 as well. It's more like three unicorn years. And there is a return of seasonality, which is a welcome sign. So when we saw the crazy years, it really didn't matter what season it was. People were just out buying homes. What we've started to see is more of that up and down of the seasons throughout the year. That was normal in the housing market prior to the pandemic. And they say prices are rebounding. That's nationally, but if you look here locally, they never went down to begin with. The reality check is buyers have limited options between rates and inventory of homes. So they do have limited options of homes to purchase right now. The number of new listings means people wanting to list their house and put them on the market for sale is still declining. And affordability is what remains the primary challenge. For an outlook, new construction is starting to grow again. Builder confidence is up. There were some local builders here that literally stopped new starts because they wanted to see what the economy was going to do. To which I looked at them and said, I've got like 8 buyers for any home that you build, so I don't know why you would do that. Well, their confidence has kind of come back, and they have started to build again. And that's happening throughout the country. And then once all of the summer data is in, everybody's kind of expecting a moderately active summer season. Though I will tell you, the last few weeks here locally have been absolutely insane with activity. multiple offers on, if you're in that kind of that move up range, which is like the 300, 400 or 450 range. It's been busy. Every home that I have gone to with buyers has had multiple offers on it the last few weeks. So it's gotten a little bit. Market has definitely heated up here a little bit now. I do expect part of that is just because of the seasonality. So there's a lot of people that have to move during the summer, or not have to, but want to move so that when they move to the new place, they can get their kids enrolled in school and not kind of make a mid-year or partial year move for the school. So we had, I think, some of that happening where everybody was kind of waiting on the rates, and then they finally decided it's July. Who cares about the rates? We got to move and get our kids in school. So. But we'll see how that ends up. So if you look, these are the national statistics. So if you look at the existing home sales, they've been fairly steady. But if you look, it's still below what would be considered the normal. So this graph goes all the way back to January of 2014. And you can see there's still a pretty wide gap between now and what was considered the historical average home sales. So that's what's putting a little bit of a push on the inventory as well. But you can see the peaks that happened since January 2020. So kind of like mortgage rates, peaks are going to lead to a valley. It all has to balance out, and it's that pendulum swing. So it's really no surprise to at least me, that when you have those peaks, there's going to be a valley that follows before everything kind of balances back out. This is a quote from Lawrence Young, the chief economist for the National Association of Realtors. He says, available inventory strongly impacts home sales too, obviously. Existing home sales activity is down sizably due to the current supply being roughly half of that it was in 2019, which was prior to the pandemic. And you can see this as far as the active listings or a count of at any given time how many homes are listed for sale. You can see that we are up from January of 2021, but we are way down from prior years. It's half of 2019, 18, 17. So you can see we got a lot of territory to make up if we want to get back to kind of historic norms. In June, the number of homes newly listed for sale declined by 25.7% compared to the same time last year, and new listings remained 27% below pre-pandemic 2017 through 2019 levels. In fact, the pace of new home listings year to date is even 16% lower than in the first half of 2020, when the real estate market tanked because it was contending of the pandemic closures, restrictions, and uncertainties were nobody was moving because we were all either stuck inside or nobody knew how the pandemic was going to go. So that's I like the way they say here. It's highlighting just how short on new options buyers in today's market really are. That we actually have less homes to view right now than we had when the pandemic, the first few months of the pandemic, when everything went off the market. So this is just a graphic representation that you can see that new listings are way below previous years. And you can kind of see where all those lines, again, going back to 2017, we're way below 2020. And we're definitely way below the last 2 years. This is one of those quotes that absolutely astounds me from an expert. Because hindsight's 2020, but at the same time, I'm like, you could not have predicted this. And this is Tom Barkin, president of the Federal Reserve Bank of Richmond. He says, I didn't fully anticipate how much the move in interest rates would convince people not to put their houses on the market, which is astounding to me, because if you triple the interest rate on a mortgage, you've tripled the interest side of the mortgage payment, which has really ran up that mortgage payment. And you didn't think that would cause people to not want to move when their current mortgage is like a 2.5%, but now the mortgage is at 7%, and that's a pretty big disincentive to sell your house. And you can see even consumer home price expectations are no longer. The general public is no longer thinking that home prices are going to drop. you can see how that has rebounded so far this year, where people are realizing that, yeah, home prices are probably still going to continue to move up. So now I'm going to run you through the local real estate market real quick. And this is kind of just a quick snapshot of the market right now. You can see that the only area that is up in our local market over the past 2 years is the number of active listings for sale and the sales price, and of course the absorption rate. And so just a quick, what that absorption rate, it's measured in months. And basically what it means is if we put no more homes on the market right now, based on the average sales per month over the last several months, how long would it take to sell out of our current inventory of homes? We kind of use that as an indicator of whether it's a seller's market or buyer's market. You can see we're at 1.9 months, which is still well below the 5 to 6 month absorption rate that is considered a balanced market. Anything higher than 6 months starts getting into a buyer's market territory. So we're still in a persistent seller's market, and that's not really changing anytime soon. And yes, home prices have not really moderated that much. We expected maybe that they would moderate to maybe just single-digit percentage increases this year, but as you can see, just in the month of June, it's up almost 11% from June of last year. If you look at the number of active listings, so that orange dotted line is the current year. You can see that the number of active listings is trending more towards the pre-pandemic years. And that's probably where I bet it's going to continue to go for the rest of the year. If you look at the number of sold listings, that number is also trending more towards the 2019 levels. Not the crazy 2021, 2022 levels. But when you look at the number of pending listings, that also is trending more towards the pre-pandemic levels. But what you got to understand is, I didn't have time to go all the way back to like 2017. 2018 and 2019 were really good years, really hot years in our local real estate market. It was just the 2020s and 2021s and 2022 went nuclear. So we're kind of just returning back to the pre-pandemic, but it's still going to be a hot seller's market. This is where our numbers are trending just like the national ones. So our number of new listings is way below the pre-pandemic level. And we'll talk a little bit more about those reasons, but you can just see that people are not putting their homes up for sale right now. You can see the average sales price is still trending up. It's continued to stay higher over last year, except for last month. May was the only month that we saw an average sales price below the previous year. And you can see that compared to 2019, it's up almost 70%. Now, if we look at monthly home price appreciation, so there's two ways to look at home price appreciation. Most of us realtors, the only data we have available to us is median, is where the median price is in the market, and how does that middle price change throughout the years. There's some other ones like Case-Shiller and stuff that I do think are probably a better indicator, but we just don't have access to that data, because what those indexes look at is same home sales price changes throughout the year. So they'll look at a home that's sold, and they'll look at what it previously sold at to come up with so they're not looking at a market-wide thing. They're looking at individual homes. How much are individual homes appreciating to come up with their home price appreciation index? But anyways, you can see that the middle of our market continues to move up. We did see, March and May, the prices were not up quite as high as the other months, but you can see most of the months of this year have been in the double digits as far as home price appreciation. So again, it has not moderated to single digits in our area. That's because we still have a ton of people moving to our area from outside of it. So the bottom line is housing market seasonality is returning to normal. The seller's market, or the low inventory market, stubbornly persists. Home prices continue to rise, and mortgage rates and new listings continue to be the throttle for home sales this year. And part of that reason is I talk to Josh and I both talk to buyers and people that own homes all the time. And the one thing that I hear from them all the time is, especially when I'm trying to see if they want to list their home, they say, I would love to list my home, but there's two problems. One is there's no homes available that I would want to purchase. So I know I could sell my house, but where am I going to move to? And then the second one is I've got a 2.5% interest rate. Why would I want to sell and move into a 6.5 or 7% interest rate? Where you combine that with the continued uptick in home prices, even though they've got a good wad of cash available from the increase in the value of their home, by the time they apply that to a new home, they're not changing their mortgage payment. And most of the times they're probably increasing their mortgage payment for a lower priced house. Mm-hmm. So that's one of the reasons why you're seeing that number of new listings continue to decline, because of the low inventory market and the high interest rates, where we've all had ridiculously low interest rates before. I mean, those, I know sometimes we tend to have a short memory, but those 2.5 sub 3% mortgage rates have never happened in modern history. So to expect those to come back is not very likely. Throughout most of history, the 5, 6, 7% was sort of the normal. Anything else you want to add to bottom line it, Josh?
Nope. I think everybody needs to keep an eye out on the market and just keep an eye on everything. Things are going to get better. So, I think we're finally on the slope. I think we've peaked on the mountaintop and we're on our way back down. So,
yes.
And it's a gradual decline, not a straight hurry up and run down the hill. It's more like a winding road that slowly goes around the mountain downhill. So,
and I think we finally hit the part two that we're not going to see any steep inclines either. That if things turn to start moving up, it's going to be a gradual slope up too. I think the high volatility days are behind us, or maybe I should say, I hope the high volatility days are behind us. I will say buyers do have options. I mean, buying a home when you have one to sell was extremely hard a year ago, and even harder than that 2 years ago. But I'm able to help buyers negotiate to purchase a house that is contingent on them being able to sell their current house. I've done several deals like that lately. So we are seeing sellers starting to soften up and not be so hard on what they're looking for, because there aren't as many buyers out there looking, even though we're still seeing multiple offer situations right now. It's only in certain price ranges and also certain areas. It's no longer kind of everywhere. So sellers are starting to become aware of that and be a little more willing to negotiate and accept certain contingencies, which is good for everybody. It helps the market move in a more normal fashion, and also decreases a lot of people's stress level, except maybe the real estate agents like me. But
right.
All right. Well, I think that hopefully you found that it was a lot of information this time, because, like I said, I'm trying to do kind of a mid-year update. So probably wasn't entertaining, but if you like the data and are interested in what's going on in the housing market, then I hope you found that interesting and helpful, and that you got a lot of good information from it. Again, I am Jay Cottrell with eXp Realty. This is Josh Pruitt with Sierra Pacific Mortgage, and we hope that you enjoy the rest of your week, that you finish out your summer strong. I know we are, and we'll hope to see you back again next time. And I'll let Josh go ahead and close us out.
Thank you guys for joining us today. We'll have another update for you here probably in just a couple months, get to the last quarter probably, end of the year stuff. So, but thank you for joining us. If you guys have any questions, any comments, anything you need from us, we're more than happy to help you, answer any questions for you. When this video is posted, you can comment on the video, the post, shoot us a message, give us a call. We're more than happy to help you. So,
and don't forget to like the video and share it with all your friends as well. All right. Thanks, everyone.
Thanks, guys.